Hey, happy Alo-Ha Friday. I'm coming to you actually on a Thursday. The September 26th is my wife's birthday. She turned 80 years old today. I'm kidding. She turned 56 years old, 56 years young, and super excited to spend another 56 years with her. But, well, not more important things to talk about, but certainly important things to talk about. Let's talk about the housing market. So much news, so let's get right into it. Big three, prices are up, inventory is up, and guess what? So are interest rates. Yes, they are up. Surprise, surprise. We'll get into that, but there are some concerns moving forward. There is an opportunity for rates to come down. Big news this week, we had a lot of home reports coming out, pending home sales, new home sales, showing signs of a recovery. Home appreciation, we had a big home appreciation report come out. We'll get into that. And then I want to talk about the risk of waiting and becoming greedy. All right, we don't want to be greedy when we see the rates come down. Let's get into the new home sales. So this is for the month of August, and really rates are still keeping buyers on the sidelines. All right, this is again, rates started coming down right at the end of July, but that wasn't enough to get enough people into buying new homes. New signed contracts actually declined another 4.7% that in the month of August, but up almost 10% year over year. And when you look at the number of new homes, really only 105,000 are complete. So we're just not completing enough homes for the market to sustain the demand in the market. New homes for sale at 467,000. So those aren't bad numbers, but we really need to see an improvement. Median sales prices of new homes actually dropped down 2% month over month to down to 421,000. So new home sales, good, not great. And then let's get into pending home sales. All right, pending home sales, this is for the month of August. These are people who are in contract and are really a good, basically a good forecast of what we're going to see in September for existing home sales. So we had the index is still down, and really what this is showing, it actually declined from previous month, but what this is showing is that while rates started to go down in July and in August, we didn't see, it's going to take some time for these lower rates to equate to more people going into contract, more people buying homes. We think they are, and that's what it looks like, but it's not going to happen overnight. We're not seeing this mad rush like we did when rates initially dropped at the beginning of COVID. As we see rates continue to go down, or if we see them continue to go down, and we see inventory continue to increase, we'll start to see pending home sales increase, and I think that index will start to go up. Certainly beating the average from last year, which was 76.5. Now I want to talk about the risk of waiting. I have a lot of clients who are refinancing right now, and I've had this discussion with them, and I want to go over this with everybody, all right, because I think it's important. Say you bought a home in the last 2 years. You bought a $900,000 home, and you got it at 6.25. I tell you, there's some people who wish they had a rate at 6.25. I've seen them much higher, all right? Now we have an opportunity to refinance you down to 5.25%. All right, your loan amount is still pretty high. It's about $895 because there is a cost to refinance, and so we add about maybe $3,000 to $5,000 back into the cost of the loan, depending on whether or not you have a funding fee. But let's say the refinance loan amount is $895,000. You could refinance today at 5.25, but you want to wait until rates get into the fours. All right, so you want to see rate at 4.875. And let's say it's going to take another 4 months to get there. What is the risk of waiting? Well, rates are at the lowest that they've been in 2 years. Will they go lower? Will they go lower soon? Nobody knows, and anybody who says they know, they don't. This has happened to us before. Rates have come down before into the low fives, and guess what? They shot back up. Now, I don't think that's going to happen, but I don't have the magic crystal ball. If I did, I'd be in Vegas making a lot more money than I am as a loan officer. So are you being greedy? The cost of delaying your refinance in this situation, all right, is going to be about almost $2,400, $2,397, and that's based on the savings that you're going to get in monthly payments over these 4 months that you're waiting to refinance. All right, the break even, if you refinance, you're going to save about $200 more a month by waiting 4 months. But the time to break even to waiting at 4 months is going to be 12 months. So is it really worth waiting, especially when you don't know with 100% certainty that interest rates are going to go down further. We all think they will, but we're just not sure. My question to you, or my thought to you is the juice of refinancing now, all right, in many cases is worth the squeeze. Again, when you're greedy, all right, you may want something better down the road, but there's no guarantee we're going to get there. So take your wins while you get it. And you know what? If rates go down in the next 4 months or 5 months, guess what? You'll refinance again. All right, but at least you know you got in the savings. All right, taking your wins a little bit at a time, not swinging for the fences the first time and striking out. Ooh, that's another one. That's another comparison there. I love it. Risk of waiting. There is a risk of waiting on refinancing, and if you know you're going to save $200, $300, $400, maybe even $1,000 a month, you might want to jump on that now. Okay, so let's get back to the numbers. Our initial jobless claims. Our initial jobless claims last week we're down 4,000 down to 218,000. We did see continuing claims go up 13,000 up to 1.834, but we're still down overall from where we were about a month ago. That is concerning. We need to see the continuing claims continue to go up, and we need to see initial claims continue to go up as well, and they just haven't really done that. So that's something to be concerned about as we go forward, and certainly something that the Fed is looking at. Let's look at VA rates. Tell you what, and again, VA rates, conventional rates, they're all going in the same direction. You know, all the talk the last couple months has been, last couple months has been VA rates are coming down. Well, guess what? This last week they went up. A lot of different reasons why, but really just some of that give and gain, all right, that you're going to get. Rates are going to drop and then they're going to come up. So the big question is, when will rates go down again? Well, we have the PCE coming out on Friday. You'll probably see this after the PCE, the Personal Consumption Expenditure Report, comes out. If the core inflation rate goes up, there's a good chance rates are going to continue to go higher. Will they go above 6%? I certainly hope not, but there's a good chance. So really, and I don't think that core rate is going to go down. So the next time we can expect interest rates to go down will be next week. And what's happening next week? It is jobs week. So we have the ADP, or the private sector jobs report. We have, this private sector employment. And then at the end of the week, we have the Bureau of Labor Statistics jobs report. One of the big things there that we'll be looking at is the household survey and the unemployment rate. It was at 4.2% last month. If it goes up to say 4.3 or 4.4%, there's a good chance rates will come back down. Will they go below where they've been, the lowest that they've been? I don't know. I don't know. But if they do, if the unemployment rate goes up to say 4.3 or 4.4, you can probably guess that the Fed, when they meet, the next time they meet, they're going to drop the Fed funds rate another 50 basis points. It's just me hypothesizing, but right now they're not concerned as much about inflation as they are about the unemployment rate. They think that unemployment will get to 4.5%, but they don't really want it to get up to 4.5%. So something to keep an eye on. And in any case, VA rates, interest rates this week actually went up, still below 6%, still in the mid to high 5% range. So still good range comparatively speaking. And then I want to talk to you a little bit about the 10-year Treasury, because there's a strong correlation between the 10-year Treasury and 30-year fixed rate mortgages. The spread has come down. It was up to 3% difference between the 10-year and the 30-year fixed rate mortgage. Now we're at about a 2.5% difference with conventional rates and about a 2% difference with VA. So let's look at the end of the week where the 10-year Treasury is at. It's about 3.8%. VA rates are at about 5.8%, 5.75, 5.8%. So really that is good. That is a good, it used to be up at 3% difference. So that's good. We're starting to see, they're starting to dance together a little closer. The 10-year Treasury and the 30-year fixed rate mortgage, they're dancing together. They're getting closer. All right, so that's good. But here's something to concern. As you can see, the Treasury, the 10-year Treasury has gone up over the course of the last week and a half. And now the 10-year Treasury is above the 25-day moving average. And you can see that line, that brown line, that's 25-day moving average. And what we want to see, all right, how are we going to kind of talk about with VA rates? What is it going to take to get that 10-year Treasury back below that 25-day moving average, closer to the 3.65%, which is that bottom line, that Fibonacci line down below? It's going to take I think it's going to take a good jobs week reports to get that back down and to get interest rates to come back down. If we don't see that, if the jobs report is kind of weak, we could see the 10-year Treasury go back up to 3.9. All right, in which case we'll definitely get interest rates back up to 6%. So just something to keep an eye out. We need a good jobs week next week showing unemployment continuing to go up in order to see, I think, mortgage rates continue their overall trend down. All right, so what does this mean for everybody? Hey, apps are up. Applications are up 1% for the fourth week in a row. Mortgage application, purchase applications are up 1% and up 2% year over year. This is the first time in 2 years that the year over year increase in applications is in the positive direction. So that's good. That just shows that, hey, people are paying attention to mortgage rates going down. People want to buy. People don't want to rent. All right, they don't want to rent. They want to buy. That's why you're seeing mortgage apps up. Hey, here's the other thing. Refinance activity up 20% last week. All right. Some people actually probably have been told about the risk of waiting. All right. And you know what? Saving $600 a month now versus saving $700 a month later is worth it to them. All right. Especially as pocketbooks and our bank accounts are getting depleted and you're starting to put things on credit. All right, refinance activity up 175% year over year. That's a lot. Matter of fact, 56% of all mortgage application volume last week was refinances. If you want to take advantage of these rates, get your application in. At least send me your mortgage statement. I can run a scenario for you because I'll be able to tell you pretty closely where you'll be able to refinance to. And for people who want to go buy a home, my applications are through the roof right now. A lot of people coming in, and you know why? Because they understand if you want to put an offer on a home, if you go out looking at a home this weekend and you don't have a pre-approval letter, and there are more people looking at homes, and yes, there are more people looking at homes. If you don't have a pre-approval, and guess what? You're not getting the home. Just plain and simple. So get your application in. Sellers, continue to be patient. All right, West Side still seeing credits, but there are homes. I know one home in Ocean Point had multiple offers. And the offer that was accepted was above the asking price. So competition is starting to pick up. That's something to keep an eye on. That's good news for sellers, all right? Don't give up hope. And of course, Mililani, Kaneohe, and Kailua, you're not really giving too many credits. You're selling pretty quick. That's about all I have for you this week. I am actually in San Jose, California, still working for you. I'm always working for you. But I'm going to go watch my 49ers beat the Patriots this weekend. All right, go Niners. Have a great weekend.